Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, November 28th, 2025. I'm Max Profit, and today we will explore the driving forces shaping the market landscape. The major indexes soared this week. The S&P 500 index closed at 6,849.8, marking a gain of 246.10, a rise of 3.7%. Russell 2000 outperformed all with a 5.5% increase. Trends show very strong positives across these key indexes. Market breadth showed strength despite mixed advances and declines. S&P 500 saw rising prices with 265 advances versus 228 declines. In contrast, the Nasdaq had more declines, showing 1,911 declines versus 1,213 advances, yet still closed up, highlighting market confidence. Focusing on returns, the Nasdaq achieved the highest weekly total return at 4.9%. Home to technology shares, its performance highlights strategic market positioning. Meanwhile, the S&P 400 mid-cap experienced a robust 3.9% weekly return, reflecting sustained positive sentiment across mid-sized companies. Over the long term, the Nasdaq shines with a staggering 10-year annual rate of return of 16.37%, illustrating its dominance in the tech-driven market. The Dow 30 holds firm with a steady 10.35% annual rate, highlighting reliability through diverse industrial components.
Checking out best and worst performing equities, I'm Penny Stock. SMX, Security Matters, closed at 61.4, marking a dramatic weekly surge of 1,207%, driven by an upward breakout after 24 days of stagnation. Pasithea Therapeutics also shined, closing at 1.47, a rise of 402.9%, yet recorded an all-time lower close last week. Continuing with top performers, Antelope Enterprise closed at 3.9 with a weekly increase of 155.3%. A mixed trend continues, but it achieved 2 consecutive weekly gains. Verrica Pharmaceuticals also showed strength with a 116.1% increase, closing at 9.10, climbing higher for 3 weeks continuously in a positive trend. Lastly, Zynex ended at 1.26 with a 103.9% jump. Though the overall trend remains mixed, it saw a surge over 2 consecutive weeks. These stocks reflect substantial short-term gains, considering their breakout trends and positive momentum. Turning to big-cap performers, Broadcom recorded a new all-time high, closing at 402.96 with an 18.4% boost and strong upward volatility. Intel and Western Digital also posted gains, up 17.5% and 17.3% respectively, each showcasing a very strong positive trend. Additionally, Seagate Technology rose by 16.5% to close at 276.69, continuing a very strong positive trend. Keysight Technologies also displayed strength with a 14.6% increase, ending at 197.95, marking a new one-year high with robust upward volatility. Reviewing returns, Broadcom showed a significant annual rate of return over multiple years. Western Digital and Seagate Technology also demonstrated impressive gains over long-term horizons. These trends highlight the resilience and upward momentum among major stocks. On the downside, MingZhu Logistics took a hit, plummeting 89.2% to close at 0.11, marking a new all-time lower close. Clearside Biomedical followed with an 84.9% drop. Both stocks show very strong negative trends, continuing to close down this week. Adding to the declines, Inno Holdings dropped to 0.22, marking a 69.2% fall amid strong downward volatility. Twin Hospitality slumped 52.6% to 1.68. These declines underscore the strong negative trends persisting in these stocks. For this week's worst performers, MingZhu Logistics fell sharply by 89.2% to 11 cents, marking its third consecutive weekly decline and hitting a new all-time low. Similarly, Clearside Biomedical decreased 84.9%, closing at 41 cents. Most notable was Inno Holdings hitting a strong negative trend with a 69.2% drop. Big cap stocks also faced downturns. Deere experienced a strong negative trend, with a 4.6% drop to close at 464.49. Intuit also saw a hit, losing 4.3% amid some downward volatility, closing at 634.8. In terms of returns, Deere registered a one-week total return down by 4.67%, while year-to-date returns showed a modest 9.63% increase. Meanwhile, Intuit had a one-week return of negative 4.38% and a year-to-date increase of 0.89%, pointing to a challenging period for these industry leaders. Examining long-term performance, Deere has experienced a small downturn, with a three-year total return at 5.28%. On the bullish side, Intuit enjoyed a significant long-term gain of over 532.94% over 10 years, indicating resilience despite current volatility.
And now onto U.S. sector performance. The communication services sector led the way with a strong 5.8% weekly gain, reaching a new all-time high at 457.26. It's on a two-week uptrend with substantial upward volatility. The consumer cyclical sector followed closely with a 5.3% rise, maintaining a strong positive trend. Examining market breadth, communication services had impressive weekly advances with 163 gainers. Conversely, the technology sector, despite some mixed trends, posted 570 weekly advances, signaling resilient momentum. Meanwhile, financial services showed strength with 398 daily advances, indicating robust daily performance. In terms of total and daily returns, the communication services sector delivered a striking one-week return of 5.88%. The consumer cyclical sector also performed well, despite a negative monthly return, showcasing substantial gains in its immediate timeframe. Every sector registered upward movement, with positive weekly returns across the board. Looking at total and annual returns, the technology sector leads with a compelling 10-year annual rate of return at 22.66%. The communication services sector follows with a respectable 12.02% over the same period. Meanwhile, the financial services sector shows moderate long-term growth with a 10.36% annual return.
In the communication services sector, Meta Platforms ended the week at 647.95, climbing 53.70 points despite a negative trend. TKO Group closed at 193.89 with a strong positive trend and an 8.8% gain. Alphabet hit a new all-time higher close, rising 6.8% to 320.18 amidst very strong trend revitalization. Evaluating returns, Meta Platforms had a 9% weekly rise, but has been flat for this month. TKO Group added nearly 36% year-to-date. Alphabet advanced more than 69% year-to-date, posting consecutive weekly highs. DoorDash, with an overall rising trend, faced a loss earlier this month. In annual terms, Meta Platforms achieved a much lower return over 10 years than TKO Group. Alphabet's stellar growth stands at over 89% annually this year. DoorDash posted a decent annual trend with significant gains over 3 years.
Despite the title, the industrial sector closed up at 1,298.53 with a significant gain of 34.26. The healthcare sector also reached a new all-time higher close at 1,833.51 and has shown strong bullish momentum, rising 33.77. Robust upward trends characterize these sectors. In terms of market breadth, the real estate sector led advances with 127 up and only 108 declining in one day. Meanwhile, the consumer defensive sector had more one-day declines at 133 versus 67 advancing, contrasting its 4-week positive streak. For total and daily returns, the industrial sector excelled with a 2.7% weekly increase and a daily return averaging 0.67%. Meanwhile, the energy sector shows a smaller 0.98% rise this week, reflecting its steady but modest growth. Long-term performance highlights the industrial sector with an impressive 10-year annual return of 10.52%. Conversely, the energy sector struggled over the same period, with only a 3.3% annual return due to its historical volatility.
Energy stocks saw mixed movements this week. Texas Pacific Land closed at 864.29, down by 32.14, continuing a very strong negative trend with 2 consecutive weekly losses. ExxonMobil also dipped, closing at 115.92, yet maintains a strong positive trend. Examining returns, Texas Pacific Land shows a significant 21.8% year-to-date decline. Conversely, ExxonMobil shows resilience, boasting a 7.76% gain year-to-date. Schlumberger remains relatively flat, with only a slight week-long rise. However, its year-to-date return is a negative 5.4%. Looking at longer-term performance, Texas Pacific Land has had a remarkable decade with an average annual return of 33.44%. In contrast, Schlumberger experienced a decline over the decade. Meanwhile, Chevron posted a solid 6.72% total return over 10 years.
Thanks for watching. I'm Max Profit, along with my AI co-host, Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.